Even if you do get into that situation, while rates are higher and rents maybe are coming down or something along those lines, you still have somebody who's basically buying you a house.
Hey everybody, Andrew Howie here with Pine Financial Group, where we work together so you succeed. Hey, if you found us here on Facebook, you found us here on YouTube, and you like the content we're putting out, please hit like, please hit subscribe. We're trying to grow this channel for investors just like you. I'm here today with my good friend Scott Kraft. Scott, how are you doing today?
I'm good. How are you, Howie?
Good, bud. Hey, a lot of questions that have been coming through the office. I see this one the most, I'd say, lately, and it is it still a good time to buy rental properties? What are your thoughts on that?
I'm glad you asked that. So maybe it's not as good of a time right now to buy rental properties as it was 5 years ago, 10 years ago, 12 years ago. But I'm strongly of the opinion that it's really always a good time to buy rental properties if you have the ability to do so. And the reason I say that is because, you get someone into a rental property after you've bought it with a hard money loan, fixed it up, increased your equity, and they're therefore, basically paying for your down payment right there. You get someone in there who's paying you rent every single month. And yes, you're gonna have expenses. You're gonna have to, fix the broken hot water heater. You're gonna have to repair the furnace, whatever it is. But if you can get a positive cash flow every month, that's just extra money in your pocket.
Exactly.
While someone is buying you a very expensive asset.
Right.
So I think regardless of where values are, I think it's always a good time to buy rental properties.
We are seeing interest rates kind of go up a little bit. Does that change how you feel about it at all as you've seen this go up?
Sure. So with the appreciation that we've seen in our market and across the country over the last number of years, and with interest rates finally creeping back up to try and slow down that fire that we've got in values, the margins are definitely getting thinner. But rent has also been increasing as well. So, the amount you're able to charge tenants goes up, but so do your costs as the landlord. So with both sides of that, rent going up and interest rates going up, you might even get to a point where you're closer to a break-even cash flow, meaning each month you're basically paying out more or less what you get back from the tenant. And that's not a great position to be in, but think about it this way. Even if you do get into that situation, while rates are higher and rents maybe are coming down or something along those lines, you still have somebody who's basically buying you a house.
Exactly.
So even if you're at break even, that's not where you want to be, but someone every single month is paying off your mortgage that in 15 years, 20 years, 30 years, whatever kind of loan you're on. Once that's paid off, that's free and clear. You can use that equity however you want.
Yeah.
You could sell it. You could just keep it rented. Let someone pay you that fair market rent every month, and then you don't have to pay the mortgage. You just have a ton of equity once somebody buys that house for you.
Yeah.
I just think it's always a good investment.
Yeah. Anything you want to say in closing?
Yeah. So one final thought that I have on that is, while we're still in this very appreciative market right now and values are skyrocketing, that's not going to last forever. So it will eventually start coming back down, but you shouldn't worry about what happens in the next few years. Really, you should be more concerned about what's going to happen in the next few decades, because depending what stage of life you're in right now, a real estate investment is a long-term thing for it to really build you wealth. And you just kind of have to sit back every single month and deal with, the changes in values and the fluctuations in rent as you go along that long-term project.
That's really well said, Scott. Everyone out there, if you want to get any more information from us on this, elaborate on some of these points, please feel free to reach out to us, pinefinancialgroup.com. We're happy to take your call. We're happy to email. Thanks for tuning in today.